Another day and another drop in crude. WTI's slide is consistent and reliable. Let's bring in Scott Bauer and start there for our afternoon conversation. He's the CEO of Prosper Trading Academy. We got a little time here until the bell. Scott, stocks are kind of grinding back and forth, but the conviction in crude, it's incredible. What do you make of it?
Well, you got a couple things here. Obviously, the data out of China, which has kind of, turned the market upside down, if you will, in terms of demand. And then you've got, some stories here that I've seen that are out there about the Iranian deal, and that if, that actually happens, that can bring over 1 million barrels a day back to, back to production. So between the two here, in regards to this momentum to the downside, that's piling on with what we've seen over the past couple weeks here. I think the velocity of what we're seeing, though, Oliver, I really think crude is oversold here. Can it hit 85? Absolutely. I think it's oversold. If you're trading in crude, I'm not talking about a long-term investment. If you're trading in crude, you've got to be on this back and forth, 86, 87 level, 91, 92 level, just back and forth. It has worked. If you use stops, it's been a great trade. You're going to get stopped out at some point, but that's why you use stops.
Scott, where do you think the difference between nat gas and crude gets resolved? It's like we've got two sides of the energy trade, and they bear a lot of similarities, and then now they're doing the opposite. Have you seen anything like this? I mean, generally we think about commodities as, and especially within the context of energy commodities specifically, moving in generally the same direction.
Right.
Is there a way to trade that disparity between these two?
So the disparity is happening not because of technical reasons. It's happening just because of news flow and what may happen to Europe with their natural gas supplies and over the winter time, which basically is all hinging upon Russia and what happens with the Ukraine and Russia war here. Whereas on the crude side here, now you've got, instead of, a supply issue, which we were all worried about a month, 2 months, 3 months ago, now it's, flipped on its head, and it's more of a demand. I don't want to say destruction, but a huge pullback in demand. So when you look at crude and natural gas here, they're on complete opposite ends of the spectrum here. I don't know when they will converge again, but if I had to make a guess here, I would think that we're going to see natural gas start to calm down again, and I think that we'll see crude rally above 90. Are they going to, kind of converge again? I mean, only time will tell, but I think that, the big differentiator here is what's happening out of Russia.
That's a good point, Scott. Does it mean that there's going to be, is it possible, as we kind of stretch this a little bit macro here, is it possible then we could have a disconnect between our own central bank and Europe's central bank? It seems like they've got a whole separate problem now that is very much the opposite of our good situation where WTI is enforcing that peak inflation narrative.
So we've talked about this, you and I, for a long time here, the actually disparity between our central bank here and central banks, not only just in Europe, but in Asia as well, that they were all behind the curve. They were behind what we were doing here. And while we were aggressively raising rates, they've been standing pat or just trying to catch up now. Now you make a great point that, maybe we're pulling in the reins on what's going on, that we're seeing rates come down, where European central banks and especially Asian central banks, we're going to see the RBNZ probably raise rates by another half point tonight. We're seeing them still trying to catch up. So it's not a good spot. It's not a good spot for these other central banks to be in terms of trying to catch up to the marketplace. But boy, oh boy, is there a massive disparity that we are seeing. You're spot on with that.
Scott, what do you like here generally? Kind of give me an idea, if you can, what's taken up most of your time as a trader. I mean, we've got this stock rally that's turned into meme mania again with Bed Bath & Beyond. We're talking about this wild dispersion in the two main energy products. And then bonds are like slowly creeping higher in yield again. What's drawing your attention?
Actually, overall, I've really been focused on a lot of these energy stocks and the energy complex, and really playing some individual stocks off of the movement that we have seen in crude from the 90, 92 level down below. And a lot of these stocks are just moving lockstep with them. I mean, I can give you names of, 2 or 3 that I've been in and out of watching closely. But honestly, that is really where I have been focused in.
Okay, so you like the energy equities, generally looking for them to firm up?
Well, right now I look for them to firm up with this big pullback. But, firming up means, to me as a trader, firming up means if I see a 5 to 10% move on that, I'm out and probably taking the other side of that. So I'm not looking at these as long-term investments, but I'm looking at names like an Occidental Petroleum, an Oxy that has come off sharply, or a Chevron, or a Devon Energy, names like those, and I'm just playing them in and out and in and out. And I think those are really good proxies for trading in the energy space right now.
Okay, like that. Appreciate it, Scott. Thanks for the details. Great convo here.
Got it.
Helpful to expand that energy discussion out to the big picture on the differences between here and abroad on the inflation story.